Hi guys, this is Aditya Vora here. It is always said that there is a bull market in some part of the world. In fact, if you look at the stock markets, there is also a bull market in some or the other sector. The genius lies in finding it, investing in it, and staying put during times of underperformance. The former is relatively easier compared to the latter, and that is precisely what value investing is. Now, my next statement might confuse the conventional buy and hold investors. There is a notion in the market about buying good quality businesses and forgetting them. Forget cyclical sectors, buy and hold doesn't even work in FMCG. The only constant theme in the market is sector rotation. If you look at the stock markets over the past 20 years, it has always been a market of sector rotation. While 2003 to 2007 was the era of infrastructure and real estate stocks, the bust which followed after that due to the global financial crisis led to the sharp rise of pharma and FMCG sectors. Post-COVID in 2020, it was the chemical and diagnostic space which was the darlings of the market. However, in 2022, when things normalized, the abnormal valuations of chemical and diagnostic sector reverted to mean as earnings started to slow down. In 2022, the focus shifted to value from growth, where public sector stocks were preferred. Stocks like NTPC, Coal India, Power Grid, and the likes attracted strong flows not only from institutional but also retail investors. This was mainly on account of the superb valuations they had. In fact, the barometer of PSU sector, which is the Nifty PSE index, is close to an all-time high. Friends, what I am trying to highlight is that every sector is cyclical no matter how defensive it is perceived. Pharma and FMCG, which are touted as defensives and safe, also have an element of cyclicality in them. Now the question is, how do we find out which sectors are likely to get in flavor? The simple answer is valuations, and the more complex answer is industry trends. Let me give you an illustration about the most unloved sector now and how fortunes can change for this sector. I am talking about the pharma sector. Let me take you back to 2009, which was where India started getting recognition as the pharmacy to the world when it came to branded generics. While the innovation was done in developed countries, the problem there was the cost factor and the patents to the new drugs. This kept the prices of branded drugs very high, becoming increasingly unaffordable for the American population. The fix was, as the branded drugs go off patent, companies in India and China started making the generic version of those drugs at a fraction of the cost. The key factor was cheap labor along with pharma expertise in India and China. In fact, coincidentally, even the domestic pharma market in India started doing well. Now for any pharma company, India business was a cash cow, while the US and Europe business was high growth and high margin business which pushed ROCs and ROEs of the companies. If I have to give you statistics, India's exports of branded generics grew by 16% compounded annual growth rate from FY09 to FY15, while the domestic market continued its steady growth. This led to higher earnings and margin expansion during that period. The scenario was a perfect Goldilocks scenario where big pharma companies like Sun Pharma and Lupin became cash-generating machines. I am sure you know when companies have a lot of cash, they generally go for acquisitions to fuel inorganic growth. This is exactly what happened when companies like Lupin and Sun Pharma went for acquisitions in their ambition to fund future growth. Lupin acquired Gavis at extremely high valuations, while Sun Pharma eventually acquired Ranbaxy, which according to me was a bad deal. During 2009 to 2015, while the stock prices zoomed, the valuation multiples too re-rated. The time to invest in pharma stocks was 2009 or 2010 when export business was looking promising. The pharmaceutical sector in 2008 was at the same place as what the IT sector was in the mid 1990s. The 6-year period from 2010 to 2015 led to strong outperformance of the pharma sector as compared to the benchmark Nifty. This was primarily on account of A. Strong revenue and profit growth, and B. Re-rating of valuation multiples led by strong growth. Stocks like Sun Pharma, Lupin, Biocon, Strides, Ipca Laboratories, to name a few, gave stellar returns during that period. After all, pharma was the defensive sector when nothing could go wrong. Well, the problem was in the valuations. The pharma sector during 2009 was available at a price to book ratio of 2.8 to 3 times. Now, I know it is easy to say that the right time to buy was in 2008 or 2009 when the valuations were relatively cheap. I am sure no one can buy stocks or sectors at the bottom. The point is, even if you bought the pharma sector stocks between 2010 to 2013, you were buying at reasonable valuations. In fact, during the 2012 period, pharma was already a discovered story. However, the valuation started accelerating ahead of the fundamentals. While the margins and return on equity for pharma stocks were rising, the valuations were rising at a faster pace. So much so that the price to book of some pharma companies were at 6.5 to 7 times. Now, how on earth can you have a price to book value of the top 10 pharma companies at 6.5 times? This is the multiple which some of the FMCG companies get. It was at peak valuations where quarterly numbers of pharma companies started moderating and eventually plummeted. Now what happens is that when 1 or 2 quarter numbers are bad, people ignore it as it is difficult to understand the peak or predict trends. Eventually, margins, sales, profits, everything moderated, leading to massive derating in the multiples. Just out of context, let me tell you how derating happens. First, earnings decline, then the multiple derates. And what happens is that as earnings or EPS is declining, optically the valuations still look high despite the multiple contraction. For the pharma sector, while margins were on an uptrend till FY16, the stock started peaking out before it was reflected in fundamentals a year later. The point of backtesting data was to show you how valuations are the most important parameters for cycles ending. From a fundamental perspective, the decade from 2010 to 2020 for the pharma sector was split in 2 halves. The first half, that is 2009 to 2015, is what we call what went right. Booming export growth on new opportunities, steady domestic business, valuation comfort, domestic facing sectors weak as recovery was underway post the GFC. Now for the latter part of the decade, which is the second half of 2016 to 2019, this is what went wrong in the pharma sector. Pharma companies acquired overseas companies at exorbitant valuations on assumption of high export growth. R&D expenses were at their peak. Most of the free cash flows were burnt in R&D. However, what happened is exports slowed down on pricing pressure in the US along with vendor consolidation. Valuations were too high and had to derate on slowing growth. Now the NSE Pharma Index had made a top in October 2015. The index as of March 2023 is at the same level. So technically no returns for 7 long years. So friends, the question to be asked now is, where are we in the cycle? What I have done is I have curated a list of top pharma companies and compared valuation multiples with the last 5 years of profit growth. The combination, subject to fundamentals obviously, should be lower price to book and lower 5-year profit growth, indicating higher room for upside when the profits come by. Net in the last cycle, valuations peaked at say 6.5 times, while the sector was a strong buy at 2.5 to 3 times. Currently, while valuations are moderate, if earnings start to kick in, this sector can see massive re-rating. So let me end this video by telling you how psychology works in the stock market. When everybody dislikes a sector, that is precisely the time to go overweight on it, obviously subject to fundamentals changing going forward. So friends, thank you for watching my video and do let me know in the comment section if you have any questions or queries. Thank you.